XRP's huge price rally this week, it was driven mostly by just one exchange, Upbit, based in South Korea. According to new data, 70% of all net XRP by pressure came from this single platform. In contrast, Coinbase in the US accounted for just 11%, and Bitstamp in Europe only 6%. Meanwhile, Binance, the biggest global exchange, actually recorded negative by pressure, meaning more people were selling XRP than buying it there. So what does this tell us? Let's take a closer look at how South Korean traders may be playing an outsized role in XRP's movements, and what it could mean going forward. Let's begin with the facts. As reported by U.Today, XRP experienced a sharp rally earlier this week, reaching close to $3 on Bitstamp before slightly pulling back to around $2.79. But while the global crypto market has been generally bullish lately, XRP's surge wasn't evenly driven across all exchanges. It turns out that South Korean traders on Upbit were responsible for the majority of the buying. To put it simply, out of a total 45 million XRP net by pressure across spot markets, Upbit alone contributed 70%. That's a significant concentration of trading activity in one market. Meanwhile, Coinbase, the largest U.S. exchange, only made up 11% of that net pressure, and Bitstamp, a major European platform, just 6%. Even more surprising, Binance, which normally leads in volume, showed negative volume delta. In plain terms, Binance users were selling more XRP than they were buying. So, what's happening in South Korea that makes this country such a strong driver of XRP's price? Well, South Korea has a long-standing culture of speculative trading. This goes back even before cryptocurrencies were around. In the past, local investors were very active in stock trading and other high-risk assets. Today, that same speculative energy has moved into crypto, especially altcoins. According to reports, altcoins make up nearly 90% of the trading volume on South Korean exchanges. That is sharp contrast to platforms in the US, where Bitcoin and Ethereum still dominate. South Korean investors, especially younger ones, tend to chase high-reward opportunities. And XRP seems to fit that profile, offering both volatility and a strong community narrative. This isn't the first time XRP's price has been driven by South Korea. During XRP's Q4 price rally, South Korean traders also played a big role. At that time, they accounted for about 1/3 of global spot trading volume for XRP. So the trend is clear. When South Korea gets excited about XRP, prices move. Now, let's take a step back and ask a few important questions. Is it a good sign that XRP's price depends so heavily on one market? The answer is mixed. On the one hand, strong buying interest from any region can boost momentum. It shows demand and enthusiasm. But on the other hand, if that demand is too concentrated, it may lead to volatility or short-term rallies that aren't sustainable globally. For example, if South Korean regulations change, or if sentiment shifts, it could affect XRP's price quickly. Also, with such a strong speculative culture, price movements may not always reflect long-term fundamentals. Still, it's important to note that many technical analysts still believe XRP has room to grow. Even though the rally stalled after hitting $2.99, it didn't crash. It just leveled out around $2.79. That could mean traders are simply pausing, not exiting entirely. In summary, XRP's latest rally shows how regional enthusiasm, especially from South Korea, can significantly shape global price action. With Upbit leading the charge and contributing 70% of net by pressure, it's clear that not all markets influence XRP equally. This situation also reminds us of how global crypto really is. Price movement isn't just about one or two big exchanges like Binance or Coinbase. It's also shaped by regional habits, cultural attitudes toward risk, and local investor behavior. The question now is, can XRP sustain this momentum once the South Korean buying slows down? Or will we need stronger adoption across more markets to support long-term growth? We'll be watching closely. If you found this breakdown helpful, be sure to subscribe for more clear, thoughtful crypto discussions, always based on facts and always asking the right questions. Thanks for watching.